Hey guys, it's Will here. I'm going to talk about the markets again and some areas you might want to look into for investment. Obviously, it's a tricky time right now, but if you watch my videos in the past, you can check them out even after this video. You'll see I've been talking about a downtrending market for quite some time. And you can see that you have this uptrend and then you start to go down, which is a downtrend has lower highs. So this was your high, comes down, it comes back up, and then it goes down. And so there's a new lower high here, and then you have a lower low, so you come down, up, break that low, and you come down, there's another low, so this low and this low, so this low is lower than that one. So a series of lower lows and lower highs is a downtrend. There's other ways as well to detect that. So you have this downward sloping momentum, the price percent oscillator, or MACD, and when you get below zero, this line here is usually a worse area to be. I mean, a weaker area, but some people do buy dips and stuff, which I'm not advocating. But this is a weekly chart actually, and so sometimes you get little rallies here, but you have to be careful. It hit at the 50-day and it stopped. So if we go back to the daily chart, I've been talking about this for quite some time. Because once you broke down, you're below the 50 and the 200, you bounced off and you kept going down. Then you had a rally and it bounced off the 200 and it kept going down. Then you had this little rally here, didn't make it very far. So when you're looking at this spot like right here, you're hoping that you're going to get a reversal, but you have to, ideally there would be a higher low established, so not just a few, up days. And you saw a cross of the MACD or price percent oscillator, but you are down quite low. So you can see how eventually it turns around here. And that's the NASDAQ. And so if you go on monthly charts, you've got this downward trend, red volatility stops downtrend here, which could go to this 50-week or maybe even some of these support lines here. You also have the 200-day, but you've got this crossover down here. And so it's in a downward slope, which is not great. Stochastics are heading down. They're not quite. I mean, the average is not quite down at that level, but this is a bad indication. Then you go with the weekly. So weekly is a stronger trend as well as the monthly, and you can see that like right here where it would have been tempting. Once you're close to a 50-week or whatever, a moving average, you got to be careful. And this line momentum here showed it didn't quite cross over. So we never got up, into the green bars here or crossed over at all. And it was still below zero at this point. So the moving average is heading down the 9-day exponential. So that's another thing you could focus on, is waiting for that moving average to move, which is a little bit slower, obviously, to respond. But so similar, everything's pretty much in a similar boat. I'll go back to the daily chart. Bounced off the 50 here. We've been going down. There's gaps as well. You see this big, strong gaps. Those are emotional sort of situations. We're turning over and about to cross down the momentum again. S&P 500, same thing. Gaps down, crossing momentum. And Dow Jones, all pretty much the same. If we go to weekly chart, we can see that one thing you can do is draw a line. Oh, I already have that. So there's like a downward channel, and or this could be a bit, depends on the time frame, but sorry, I'll get rid of this line for a second. But you're heading in this downward channel. So in terms of the upper line, you'd want to break through that and start to establish an up. You see how the momentum is still down. And NASDAQ, we're getting close to the 200-week, but you want to see this turn around and start to break through this downtrend here. I'm just going to scroll out here. So I use a wheelbarrow on the mouse to scroll out to see a bigger time frame. So if you want to get TC2000, which is what I'm using, you can check out the link in the description below my video. There's a link for free trial or $25 off, subscription if you sign up for that. it's a great program to use for stocks. And what I do is I've got these columns here with 90-day, 30-day, 5-day performance. So if you sort by 5-day, reverse that. And the worst is obviously the NASDAQ. You can see here 30-day, it's down the most as well. And then the 90-day, the NASDAQ is down 31%. These are sizable drops, obviously, but historically, there are cases where it reverses, like at that amount of drop. It's, some people are hoping for a turnaround, but there's also a lot worse scenarios. And this is a scenario that's different from some of the ones that people compare to, because they're going to be probably raising rates quite aggressively. I know I used to think, or I say that, they couldn't raise rates much because they have so much debt. But the inflation right now is so out of control that it's, the only thing they can kind of do is raise rates to try to kill demand. And, I think, I have this feeling they're going to really try to do this. I would like to see even higher rates, like 5. They're going to do 50 basis points. I think they should do more than that, like coming up here, but because they're way behind the curve. But people are thinking there's going to be a reversal in the Fed or whatever. But I mean, they're not looking at how much this is going down. They're looking at the interest rates, and we just had a huge CPI print for 8.6%. So I think they're going to be raising rates, and I don't think the market has fully appreciated that yet. I mean, they're getting a bit of taste of it, but I think the Fed should even go more aggressively, and they're way behind the curve. So in terms of what to do about it, you've got a few options. You've got inverse ETFs, or you can short stocks and things like that. But if you want to buy inverse, I've talked about this in many videos, but I'll give you another some tips here. Is you got the PSQ for shorting the NASDAQ. You have RWM for shorting IWM. SH is the S&P 500 short ETF. DOG is the Dow Jones. Those are like 1-to-1. There are some leveraged ones as well. Obviously, those are more risky. So you've got the inverse in the market, the main markets, but then you have, like in Canada, you have this Bitcoin ETF inverse. And Friday you saw this break up, and then today it's going to be even more high because over the weekend Bitcoin went down quite a bit. But the break of that would have been a good entry point. But this is the ARK inverse ETF. You can see this is today live. This is pre-market. It's already up 5.4%, which is the inverse of ARK. So you could look at sectors in Canada. There's this cannabis, and that's been an unbelievable uptrend because it's the inverse of the cannabis industry. But that one's been incredible. There's a financial in the US. There's this short financials. If you want to pick certain things, you could look at Direction, which is a company that has all sorts of 2x, 3x inverse or bear ETFs in a variety of markets. Let's just go over to the US funds here. So you have all sorts of shorts here. Innovation, the FANG. These are up 10+%, even this morning, pre-market. HIB-S, which is the high beta bear. There's the web internet type 3x bear. These are hugely risky, obviously. Semiconductor SOX S. There's shorting crude oil, which is pretty high right now. So at some point it will, if it's not going to do it now, it's going to turn around, especially if there's any kind of recession, or potentially. LabD, which is the biotech. So if you sort by percent change in the US exchange traded funds, so if you click on watch lists, there's this ETFs, you just click on that. And then if you sort by percent change, that's where you'll see Or you could go to, like, I have these columns for 30 day, 90 day. If you go 90 day, or let's say 30 day, you're starting to see the tech and all the inverse starting to do really well. So, oh yeah, the other thing, if we go back to my sector ETFs, I don't know, right now the pre-market, the boat is peaking, is going up, which is the shipping and the cannabis, but you know, they're not really in a great state in terms of the market, the charts, but TBF is an inverse 20-year treasury, and this is basically mimicking what interest rates are going to do. So we just hit kind of like 3.1%, and it kind of came back down, and now it's broken basically up. It's at the peak of what it was recently at. So I think interest rates are going to head higher. I think some people are understanding that. So you can tell from this, also from these types of charts, when you're in an uptrend, that when you see a downtrend, pullback, is a good time to get in is when it breaks that pullback. So you see multiple times you're still in an uptrend, and when you start to break that pullback, so that's a good entry point, because then you have a recent low to use a stop loss, and avoids you getting in, like, say, way up here, and you might end up turning around selling right after that because because it pulled back. So right after a pullback is a really excellent entry point, especially if it's in an uptrend, because otherwise you're trying to hope that you break this downtrend. It's momentum's downward, and you're trying to, like, find that bottom, and it's a bit tricky. But TBF is one. UUP is just the dollar index, US dollar as well. You can see how we had this uptrend, and then it pulled back to the 50, and now it's breaking up again. I'm still keeping a little bit of an eye on commodities. You see a little perk up of wheat, but with the recession and that, I'm worried, like, even though prices could go up and that, there'll be demand destruction. So, but these little things are coming back: corn, wheat. I think that's about it for today. So yeah, don't forget to get the checkout link, the link below for TC2000, for doing your charting software and having all sorts of watch lists and alerts and stuff like that. And we'll talk to you in the next video.